How to evaluate cash flow statement of a business. So it is fine to understand what the cash flow is. It is fine to understand what are the types of the cash flows. It is fine to understand how to prepare the cash flow. But what is more important is how to evaluate cash flow statement of a business. कैसे मालूम करेंगे? Because again the same thing. When you make the cash flow statement of any company anywhere in the world, the formats are same. It's just that the few line items can be different, but they are going to be there. So how do you figure it out? By looking at the cash flow statement of a business, whether this is a good cash flow or this is not a good cash flow. And friends, again, it is really very simple to figure it out as to how is the cash flow statement of a business, whether it is a good cash flow or it is not a good cash flow. So we have understood there are three types of the cash flows. We have understood there is a cash flow from the operating activities. We have understood that there is a cash flow from the investing activities, and we have understood that there is a cash flow from the financing activities. So as a business, as the owner of the business, as the CFO of the business, as a consultant to a business, as a shareholder of a business, how would I look at the evaluation of the cash flow statement? And answer, of course, is very simple. So the first is the first cash flow. So how should be my cash flow from the operating activities? An answer, I'm sure, must be coming into minds of every one of you. Cash flow from the investing activities must be cash flow from the operating activities must be as big as possible, and it must be growing year after year. So the company that you are looking at, first you look at how is the cash flow from the operating activities. So when you see that the cash flow from the operating activities is large, not only it is large, but it is also growing year after year. So because you can always compare the cash flow from the operating activities of last 2-3 years. So when you see that the cash flow of the company is large and is growing, that's a good sign. That's a good sign. So obviously the cash flow from the operating activities must be positive, and it must be as positive as large as possible. Now, how should be my cash flow from the investing activities? Again, friends, the answer, of course, is very simple. I'm in the business for expanding, for growing. So if I'm in the business for expanding and growing, what do I need to do? I need to make more investment. So if I make more investment, what will happen to my cash flow? Is my cash flow going to be it is going to be case of cash inflow, or it is going to be case of cash outflow? Obviously it is going to be case of cash outflow. So how should be my cash flow from the investing activities? My cash flow from the investing activities must be negative. Meaning what? Meaning if my cash flow from the investing activities is negative, what does it mean? It means money is going out. So if the money is going out, the cash is going out from the business, it means what? It means the assets are coming in. And if the assets are coming in, what does it mean? It means the company is spending money to increase the revenue generating capacity. So when the company is spending money for increasing the revenue generating capacity, obviously company is increasing the profit earning capacity as well. And therefore friends, the cash flow from the investing activities must be negative. Assuming that economy is doing well, and there is a huge demand for the product of your company, then ये फिगर जो इन्वेस्टिंग एक्टिविटीज़ का जो कैश फ्लो का फिगर है, जितना ज़्यादा नेगेटिव होगा और उतना अच्छा है. क्यों? क्योंकि आपके प्रोडक्ट की डिमांड अच्छी है. योर प्रोडक्ट इज़ कमांडिंग प्रीमियम. So obviously there is a need for you to expand your operations, your capacities, and therefore it must be negative. How should be my cash flow from the financing activities? Okay. Now the cash flow from the financing activities, depending on how is your cash flow from the operating activities, how is your cash flow from the investing activities, how are the market conditions, how is the economy doing. The cash flow from the financing activities can be negative or it can be positive. Meaning what? Meaning economy is doing extremely well. There is a huge demand for your product. Obviously it means what? It means you need to make more investment. So when you make more investment, you obviously need cash to fund it. So you look at your cash generated from the operating activities. So let's say for example that you need to make an investment of 1000 crore. So your cash flow from the investing activities is going to be 1000 crore negative. Now this 1000 crore has to be funded from somewhere. So now you look at your cash flow from the operating activities. You look at your cash flow from the operating activities and you realize that there's a figure of 600 positive. So meaning what? Meaning 1000 crore is what you need. Out of that 600 crore you're getting from your operations. Meaning what? Meaning you need another 400 crore to come into your business. Now where would it come from? It would come from the equity and from the debt. So in such case, your cash flow from the financing activities is going to be positive. Let's say another situation. Economy is in a bad shape. There is no demand, right? So obviously, or let's say for example, you are sitting on too much of cash. Say for example, I'm sure all of you must have heard of what Infosys did or what TCS did or what Wipro did in recent past. They were sitting on a lot of cash and they did not have any opportunity for making investment. So, and why they did not have any opportunity for investing outside? Because we all know that the IT industry in last couple of years has been passing through a bad scenario. And therefore, Infosys and Wipro and TCS, they were sitting on huge pile of cash. So what do? You don't sit on the huge pile of cash and earn nothing on it, because shareholders are going to question you. And therefore, instead of being questioned by the shareholders, what all these three companies did, they decided to do the buyback. So in such a case, what is going to happen? There is going to be outflow of cash on account of the financing activities because you are buying back the shares. So this is, friends, three principles that you would need to remember for finding out as to how to evaluate your cash flow statement. Number one, cash flow from the operating activities got to be as high as possible. Cash flow from the investing activities must be negative, assuming economy is doing well. जितना ज़्यादा negative figure होगा उतना अच्छा. And financing activities, depending on the situation, can be positive, can be negative. But in case if you are a positive, then it must be in a good mix of debt and equity.